Okay, so as usual, we'll assess the markets to look for trading opportunities, and then afterwards, if you have any questions, issues, problems, like I said, this Tuesday morning session has been set aside to address any issues, any problems, anything you have going on, no problem. So this is, like I said, I have all the time in the world today. Okay, so let's kick off. As usual, we start off by looking at the economic calendar. So let me bring that up. So today is Tuesday, the 26th of January. Tuesday, the 26th of January. Again, I'm in Rwanda, so always make sure you check your own time zone. It's currently GMT, we're GMT +2 in Rwanda. So all the times I'll be quoting are GMT +2. So the main market we're looking at is the Euro-US dollar. So we're looking for reports of high importance or medium importance that could affect the euro or the US dollar. Oh, I must also mention, obviously, the principles of what we're going through with Euro-US dollar can be applied to any market. So if you're trading any other market other than Euro-US dollar and you have any questions regarding the other market you're trading, you can also ask that during the question and answer session after we've gone through the markets. So I just want to add that to the session that, yeah, if you're trading other currency pairs or other things, then and you have questions, you can bring that up during the question and answer session. But like I said, the reason why we're focusing on Euro-US dollar is because that's the one I've advised everyone to start trading with. And of course, the principles of what we're going through with the Euro-US dollar can be applied to the other markets you might be trading. Okay, so it's Euro-US dollar we're mainly focusing on for now. Today is Tuesday, the 26th of January. So all that's have come and gone. And you can see at 9 o'clock, we have the UK employment change, which is a report of high importance. So again, like we said, anything to do with unemployment, gross domestic product, inflation rate or consumer price index, and interest rates, one has to be worried about that. So of course, we're looking at the Euro-US dollar, not the pound, but as obviously the UK being the financial capital of the world, one has to be wary trading any market prior to reports of high importance due out from the UK. And as we also know, the same with America, reports of high importance from America affects all markets. So you want to be careful trading prior to reports of high importance from the UK, even though the pound is not in the Euro-US dollar currency pair. So that's at 9 o'clock, GMT +2, Rwandan time. Let's see what else is coming up. Of course, you can just completely ignore reports of low importance. And of course, all these reports from Hungary, you can ignore them. At 4 o'clock, again, GMT +2. From the United States, we have this report of medium importance house price index. So anything to do with the housing market can also potentially affect the market. So that's one to watch out for. Again, that's why you want to note reports of medium importance. And then at 5 p.m., GMT +2, we have consumer confidence report from the United States. And again, just like I said earlier, reports of high importance out of the United States would affect all markets. And that's the last report of high importance today. So the last report of high importance today is, it's this report, the Consumer Confidence Report from the United States. And like I said, this one from the United Kingdom won't directly impact the Euro-US dollar. It could impact it indirectly. But of course, the one out of the United States would directly impact the Euro-US dollar. So today it's best to avoid trading prior to this report at 5 p.m. GMT plus 2, because that's the last report of high importance today. Again, the words always and never do not exist in the financial markets and in trading. So what we're saying is that there will be a high probability of the markets trending sideways, all the markets trending sideways prior to this report at 5 p.m. But we're not saying that's what always happens. We're saying that's what usually happens, but not always. And no absolutes when it comes to trading and the financial markets. But again, like I said, you base your decisions on what usually happens, not on what really happens. And since we know there's a chance the markets could trend sideways, we want to avoid that so we don't have unnecessary losses as traders. So we're going to keep out of the market. Well, let me say I will keep out. I will keep out of the markets till 5. You might choose to do differently. Again, like I said, every trader has to decide how, when they're going to trade and what risks they're going to take. So I should say I would avoid trading prior to 5 o'clock and leave the markets alone. And the other reason I'll do that too, I mean, the reasons I've given you already for today are enough for me to avoid trading prior to 5 o'clock GMT plus 2. But an added reason is because of tomorrow. So let's look at tomorrow. Tomorrow, we have a big report coming out tomorrow, which is the big one for this week. So the biggest report for this week is tomorrow evening at 9 p.m. GMT plus 2. We have the US Federal Reserve interest rate decision. So this is, like I said, interest rate decisions are huge when it comes to currency trading. Currencies are very sensitive to interest rate announcements. And of course, again, like we said earlier, reports out of the United States affects all markets. All financial markets are affected by reports out of the United States. So whether you're trading the commodities market, the stock market, the bond market, any currency pair, they are all affected by reports of high importance due out from the United States. And of course, the biggest you can have is the US federal interest rate decision. So that's a huge report coming out tomorrow evening at 9 p.m. GMT plus 2. So that's another reason why we need to be careful trading today, because everybody knows that report is coming out tomorrow. It's of huge significance. And there's a likelihood the markets could just trend sideways all day today till tomorrow, till that report tomorrow evening. So that's another reason to be careful trading today. And in view of that report tomorrow, like I said, number one, I'm just going to avoid trading prior till 5 p.m. today. And then even at 5 p.m., I'm only going to potentially have just one live attempt at the market, just one live attempt at the market in view of this report coming out tomorrow evening, the US Fed interest rate decision. Okay, well, let's look at the rest of the week. So again, like I always say, that's why on Monday, it's always good to look at the whole week and see what's coming up for the rest of the week. So Thursday, let's see what's coming out on Thursday. On Thursday, we have the German inflation rate and the US GDP growth rate. So that's some other big reports coming out on Thursday, inflation rate and GDP. And let's see, Friday. So Friday, we have the German unemployment rate, and again, that's huge. And German GDP growth rate. You can ignore Mexico. So we've got some big reports coming out later on in the week. But the biggest one is the US Fed interest rate decision tomorrow afternoon. That's tomorrow evening. Okay. So again, like I said, it's just taking each day on its own merit, and on the merit for today in terms of what's happening today with the report coming out at 5 and in view of the interest rate decision coming out tomorrow evening. Today we're only, well, I should stop saying we. Today I am only going to have one attempt at the market, and that would be around 5 o'clock when the last report of high importance is announced today. Again, don't forget to check Market Watch to see what's going on in the world. So again, they're talking about potential tensions between US and China. So that could cause uncertainty in the markets. So don't forget, looking out for things that could cause uncertainty in the market and make the market trend sideways. So like I said here, new president, but same trade tensions between US and China. So that could be another thing that could rear its ugly head and cause uncertainty in the markets. But of course, we're still going through the earnings season, where all those big companies are declaring their corporate earnings to the stock markets. That will have more of an effect on the stock market than the currency market. But like I said, the big one that we're going to look out for is the US Fed interest rate decision tomorrow. But yes, don't forget to keep an eye on the news. Okay, let's now go to the charts. So we'll start with swing trading. We'll start with the daily time frame, D1. So we're currently already in a swing trade. We're already in a sell swing trade. I mean, you can see from the live trade anyway. The trade was taken on the 15th of January. So they tell you when that trade started on the 15th of January, and we're still in a live trade. So there's nothing we need to do. Like I said, what we're waiting for, well, what I am waiting for is for the market to get to at least 100 pips in my direction. So I have just marked out the 100 pips mark on my chart, so I know when it gets there. So I can easily identify when it hits that mark, then that's when I'll start moving my stop loss with the moving average. But till then, I'm going to leave my 100 pip stop loss in place. So that's my swing trade strategy. So, I mean, most of you have been following this swing trade from the beginning when we started placing our pending sell order and moving our pending sell order every day with the moving average. So we've been doing that for a while. I think most of you have been saying that it's taken a long while for the market to change direction, but we've just moving our pending sell order with the moving average every day. And then it took it, like I said, on the 15th. So on the 15th of January, the market eventually broke the moving average 50, took our pending sell order with 100 pip stop loss in place. And like I said, we're still in that trade. We haven't been taken out yet, but the market hasn't moved 100 pips in my direction yet. So when it eventually, well, it might not. It might just go back up and take me out and I lose 100 pips. Again, don't forget, anytime you trade, there's a high risk of you losing money. It's still high risk trading, so there are no guarantees. So the fact we are using 100 pips doesn't mean you can't lose the 100 pips, and that's a potential. That's why we're doing 10 cents per pip. So even if we lose 100 pips, we are only going to lose 10 pounds on this trade. So it's all about money management, knowing that any trade you place, there's a good chance you're going to lose money. So you need to be careful how much you're risking compared to your capital. So I'm happy to lose that. I'm prepared to lose that. That's why I'm doing 10 cents per pip. So I'll leave my 100 pip stop loss in place until the market moves at least 100 pips in my favor. Once it does that, then I'll start moving my stop loss with the moving average. But till then, I'm just going to leave it alone. So it will either take me out and I lose 100 pips, or it will just keep going sideways, or it will drop 100 pips. Then I'll start to move my stop loss with it. So for today, there's nothing to do. Just leave it alone because it hasn't hit my first target and it hasn't taken me out. So nothing to do. Leave it alone. Check again tomorrow morning. So let's go to the day trading. So we'll go to the 5-minute time frame. Of course, that's the swing trade order you're seeing on the chart. That's not the day trade, that's the swing trade you're seeing there. So we can see where the market fell, went back up, and now it's just trending sideways. But like I said, we're not going to do anything with the market now. We're just going to leave it alone and reassess again just before the report at 5 p.m. GMT +2. So not going to place any pending orders, leave the market alone and see how it looks like come 5 o'clock this afternoon. Now, before we go to questions and answers, I just want to show you, I think in the last session, we're talking about sideways trend and whether to take the previous days into consideration when you're looking at the sideways trend. And that's actually what happened yesterday, which is just what I want to highlight. I just wanted to highlight that just to buttress the point I made in the last session. So we can see on, actually, let me start with Friday. I don't think, okay. All right, so let me just go to yesterday. Let's just make it simple. So yesterday, when I sent out the post, you can see when we're looking at the sideways trend, like we said, looking at the market today, the market was still trending sideways from last week, Friday. So because the market was still trending still trending sideways from last week, Friday, we still used it. So like I said, the market is a continuum. So even till today, from Friday till today, if it was still trending sideways between these two white lines, we will still call it the sideways trend. So it was trending sideways from around 7:40 in the morning on the 22nd of January, which was on Friday, and that's the same sideways trend from Friday all the way till Monday yesterday. We still used it because the market hadn't broken the sideways trend. So I just wanted to emphasize that. So we can see that even when the report came out yesterday morning, it was still the same sideways trend we're using. It was until the market then broke that sideways trend that we then stopped using that sideways trend, of course, when the market fell there. So at that point, it broke the sideways trend. So that's when we stopped using it. So yes, I just wanted to emphasize that point I made in the last session that, yeah, you need to, once the market starts trending sideways, you just keep using that sideways trend, even if it lasts 2, 3, 4, 5 days until that sideways trend is broken. Okay. Hello, Abimbola.
Good morning, Remy.
Good morning. How are you?
I'm very well, thank you. I just have a quick question just to sort of clarify my understanding of using the pivot point.
Okay.
Generally, if for example, I know we generally don't trade in the sideways trend, but I'm looking at the chart as it is now.
Yeah.
If I was to place an order as it is on a sell order, I would be looking to place to enter the market below S1.
Yep.
But if for example the market is on an upward trend, and it's not at the moment, I'm just saying, if it was on an upward trend, would you be looking to enter the market above the pivot point or just below R1? I don't quite understand how we use the pivot point, because sometimes you place an order just below the pivot point on a sell, and sometimes you place a buy order above the pivot point.
Okay. All right. That's a good question. Let's go back to the basics. Let me bring up the whiteboard. So usually the pivot point strategy is just based on that market support. If you recall during the course, is based on the market support, and market resistance principle. That's what the pivot point strategy is based on. So basically, what it's saying is that, like I used during the course, if you imagine yourself in a room, so the room has a ceiling and the room has a floor, and that is you. So if you jump up and down in this room, the floor will support you. So anything below you is a floor. Isn't that right, Abimbola? Abimbola?
Yes.
Yes. So you can, yeah, you can stay unmuted. I have to make sure you're following me. So
Okay.
if you're standing in this room, anything below you is a floor. Isn't that right?
Yes.
And anything above you is a ceiling. Isn't that right?
Mm-hmm. Yes.
Okay. So that's the ceiling. So if you jump up and down, you hit your head on the ceiling and fall back down. You land on the floor. So the floor keeps you within the room and the ceiling keeps you within the room. But whatever is above your head is the ceiling. Whatever is below your legs is the floor. So you can call the floor is supporting you. So the floor is a support. So basically anything below you is the support and anything above you is a resistance. It's resisting you going through the roof. Is that clear?
Yes.
Okay, good. So let's take a step forward. So if you're jumping up and down in this room, if this floor is weak, then you could crash through the floor and hence to the next room. And you'll be there. Isn't that right?
Yep.
Okay. So now this floor here is now a support. Isn't that right? Because it's below you.
Yes.
Yeah. But this that was a floor before is now a resistance. Isn't that right? Because it's now above you.
Yes.
Okay. And that's exactly what, like I say, if you just keep it as simple as that, whatever is above your head is a resistance, whatever is below your foot is a support. And that's the principle that you use with the pivot point strategy. So let's go to the pivot point strategy. So let's just assume that's the pivot. That's R1, and that's R2, and that's S1, and that's S2. Isn't that right?
Yes. Yes.
Okay, so let's start from here. So if the market is here, like you say, and that's why I want you to be unmuted. I want to ask you the questions now. So if the market is here, what is above the market here at this point?
R1.
So R1 is what? The resistance.
Resistance. Sorry. Yes. The resistance.
No, you're correct. Mention R1. So R1 is above the market, so it's a resistance. What's below the market?
At the pivot point.
So now the pivot point is what?
The support.
Good. So what you're saying is that the market falls and it breaks this support, you want to sell below the pivot. If it keeps going up and it breaks the resistance, you want to buy above the resistance. Now let's take it a step further. So the market has gone up. So the market is now here. What's above the market?
R2, which is a resistance.
Good, well done. And what's below the market?
R1, which is the support.
Exactly. So if the market now starts to fall, you can sell below R1. Well, of course, like we say, you can use R2 to trade using the pivot point strategy.
Yeah.
So let's keep going. If the market is here, what's above the market if it's here?
R1, which is a resistance.
Good. What's below the market?
The pivot point.
which is
the support.
Good. So you can sell below the support, buy above the resistance. If the market is here now, what's above the market?
At the pivot point, which is the resistance.
Good, well done. What's below the market?
S1, which is now the support.
Good. So you can now sell below S1 or buy above the pivot. If the market is here, what's above the market?
S1, which is the resistance.
Good. And then you can buy above that, but what's below the market?
S2, which is the support now.
Exactly. So now you've got it. So, but you can use S2 to trade. So let's go back to the chart itself. And let's look at some markets. Luckily, I've got quite a few markets on mine. So, so like you say, back to the real market here. So the market is here now. So what's above the market here?
I think this is R1.
No, this is the pivot.
I'm looking above the pivot point, so it's R1.
No. That's why I used that illustration. This is the market here, where my cursor is. So what's above the market?
Hello? I think I've lost my connection.
No, I can hear you.
Okay.
So what's above the market here?
I can't see your cursor.
Oh, but okay, can you see where the market is now?
Oh, sorry, it's below S, it's below the pivot point.
Exactly. So what's above the market?
The pivot point.
Good. So the pivot point is the resistance.
Yes. Okay.
Exactly.
All right.
So if the market goes up, you're happy to buy above the pivot point.
Above the pivot point. Okay.
What's below the market?
S1,
Good.
which is now the support.
Sorry, now the what?
Support.
Good. So you can sell below S1. Let's look at another market. So this is pound dollar. Okay, so that's almost similar to, let's look for another market. Okay, that's a good one. So this is dollar, US dollar, Canadian dollar. So this is the market here. Yep.
Yes.
What's above the market?
R1,
so
which
you
is
can,
the resistance.
Exactly. And what's below the market?
The pivot point.
Which is?
The support.
Exactly. So now in this scenario for dollar yen, you'll be looking to buy above R1 and sell below the pivot.
Okay.
So like I said, it's just you looking at where is the market now, and then whatever is above the market is your resistance, whatever is below the market is your support. And you want to sell below the support, buy above the resistance. Let's take it even further. Let's look at this. So this is Aussie US dollar. So again, this is what we mean by sideways. Obviously, you can see it's trending sideways along the pivot. So again, even with the Aussie US dollar, I mean the Australian index, sorry, the Aussie 200, the Australian index, you can see the pivot point is above the market. The S1 is below the market, so that's support. You want to sell below that. But again, going back to what we said, you don't want to trade within a sideways trend.
Mm-hmm.
So that's why you can't use the pivot point in this scenario, because you can see the market is trending sideways along the pivot point. So the only way you can now trade with this Australian index is to either buy above the resistance, because that's the next line above the market, or sell below the support. That's the next line below the market. But the pivot itself is within the sideways trend, so you can use it. So yes, bottom line is just you looking at where is the market now. That's what you want to do as a trader. Where is the market now? Oh, sorry. First is want to determine the trend. So you can see this is another good example. This is the US index, S&P 500. So you can see this is where the market was trending down. Can you see that, Bola?
Yes, I can.
So you can see the market was trending down, but you can see it's now trending sideways. Isn't that right?
Yes.
Okay, so now that you know it's trending sideways, this is where you then mark the sideways trend, the high point and the low point. And then you can now see the pivot point is within the sideways trend. Isn't that right?
That's it. Yeah.
Good. So that's why the first thing you want to do is establish the trend. Is it trending down, trending up, or trending sideways? Now, in this scenario, it's trending sideways now. The pivot point is within the sideways trend, so we cannot use that to trade. So the next available opportunity, if the market goes up, is to either buy above R1 or sell below S1. Because S1 is currently below the market, so that's the support. R1 is above the market, that's the resistance. But we can't use the pivot point because it's within the sideways trend.
Okay.
Yeah. So let's look at one more and then we'll quit. Let's look at FTSE. So that's the FTSE, which is all over the place. So again, actually, this is actually another good one. So you can see FTSE is just trending down. So it's, you can't say it's trending sideways just yet. It's still trending down. But as it's trending down, what's below the market? S1. So you can sell. So you can place a pending sell order there. If it starts to go up, what's above the market? It's
the pivot point,
which is the resistance. So if you want to trade the FTSE, you can place a pending buy order just above the pivot point there or just below S1. So that's actually why I love the pivot point strategy, because it's just as straightforward as that. It's just you looking at the chart, looking at the trend, making sure you are not trading within a sideways trend. And then at that point of the market, whatever is above the market is your resistance, and you want to look to buy above that. Whatever is below the market is your support. You're looking to sell below that. You good?
Thank you. Yep, very good. Thank you.
Pleasure. Hello, Bola. Morning.
Good morning. Can you hear me?
Yes, I can hear you.
Good morning. Hello. Can you hear me?
Yes, I can hear you clearly, Bola.
Okay. Hello.
Yeah, I can hear you. Can you hear me?
Yes, I can hear you now. Good morning. I hope I'm not shouting.
No, that's okay. And besides, I'm in Nigeria and I'm used to people shouting.
Okay. Okay. My question is, I mean, I've been following you over the past couple of weeks now. One of the key things that you did say, and you've mentioned again, learning about. Oh gosh, I've got an echo going on here.
Yeah.
Yeah. So about, you know, as time goes on, you kind of get your own style of trading. Yeah.
Yes.
You know, as time to get your own.
Oh, we've lost you, Bola. Bola has disappeared. Let me put a sign there just in case. We lost you, Bola. Any other questions while we're waiting for Bola to get back online? Any other questions? Any other questions, comments while we wait for our fellow trader Bola to get back online? I think she's gone for now. Any other questions? No? Oh, she's coming back in. Let's see. I admitted her back and she's disappeared again. Any questions while we wait for Bola? Or we just all, okay, I can see she's back. Okay, Bola, you can unmute yourself.
Hello, can you hear me now?
Yes, we lost you there for a minute. All right. So you were saying
Okay, yes, sorry about that. Yeah,
that's okay. Yeah, we can hear you.
Yeah. So last week when we there was I think it was Thursday or Tuesday, I can't remember which day it was. So we had a report of high importance. So about 5 minutes before the report came out, what you did is that you placed a sell order because the market was trending. It was in between the points where you could do both sell and buy. So you placed a sell order, which was fine. I understood that. Then with regards to the buy order, you said you waited until the report had actually come out after, I think it was a 3 o'clock report. So you waited until after the report before you placed your buy order. Now, in the past, on occasion, you've actually placed your buy order before the report comes out, a few minutes before the report comes out, which is what I have been doing as well. So what I was wondering is that why on that occasion you actually waited till after the report before you placed your buy order?
All right, very good question. I think it must have been, let me see if I can actually find that one. Can you by chance remember when last week?
It would have been, I think it was Tuesday when I was taking my, I think it was on Tuesday.
Oh, okay, Tuesday.
Yeah, yeah, because I was going out somewhere and I couldn't write it down because I was listening through my headphones.
So Tuesday.
It would have been either Tuesday or Thursday. Sorry. Tuesday or Thursday. But I know it was one day when I couldn't write it down. I thought I'll have to memorize this for our session today.
Okay, I think it might be here Tuesday. I think you actually asked the question here.
Oh, no. That was something different. That was about yeah, I remember that one. That was about the volatility because you explained that the market was going up because to avoid, if the market goes up and if there's any volatility in the market, you want to avoid trading within a specific area. So yeah, so you answered that question.
Oh, so it wasn't that one because that looks like one where I did not want to place the trade too soon. Let me see.
Maybe it was Thursday then.
Okay, let's look at Thursday. Let's see.
Because I have been waiting like 5 minutes before, a few minutes before the report comes out, and then I placed my trades.
Let's see. Okay, that one I did both, so that's not that one. It's not that one. Okay, so we traded the economic news on that day. No, it's not that one.
Oh, I wish I'd made a note of the day now.
This one, although this is Friday, but this one obviously was different because the R1 was within the sideways trend, so I couldn't use that, and then S1 was outside the sideways trend. So Friday, that's why I only used the sell order because
yeah.
So yeah, I'm not sure which one. I know, like you said, I'd explained the one that you remember why I didn't place the buy order. So it might have been a similar reason for that.
Okay.
Where's I'm getting confused, but yes, but I think that's but the reason why that's a good question, just like I said this morning, is that you take each day on its own merit, you take each scenario on its own merit. So yeah, sometimes if a report is due out, and so for example, let's just assume this is where the market is now. Can you see my cursor, Bola?
Oh yes, yes, I can. Thank you.
Okay, let's just assume the report is about to come out and the market is here. Yeah. You can see this is very close to the pivot point.
Yes.
So I will be very reluctant to place a pen, although I could place a pending order there, but because it is too close, I'll be reluctant to do that because the market, the record can just come out, spike it, take your order, and then fall back down. You lose money.
Right. Okay.
So if it's too close, I'm a bit reluctant to do that. But yes, so this is actually a good scenario now. So now you can see there's some space between the market and S1 and the pivot point.
Okay.
So this one, I'll be very happy to place a pending buy and sell straight away 5 minutes before the report, because there's still some wriggle room. So if the market is doing all that, I still have some wriggle room. But if it's too close like this, I'm a bit hesitant to do that.
Okay, that makes sense. Okay. Okay.
Yeah.
All right. So makes sense. So it's, I guess it's like you say, it's everything about looking at where the market is and trying. I mean, like you will say that there's no certainty, but kind of almost thinking, well, what happened? The what if question.
Exactly. Exactly. In fact, I'm happy you said that, because the bottom line is, let's look at it another way. So the bottom line is, as a trader, you know that every time you trade, there's a 60% chance you're going to lose money. So you're already starting off on a bad foot. Isn't that right, Bola?
Yes.
So every time you trade, you're more likely to lose money than make money. Start, regardless of what you do. So as a trader, what you're doing is you're trying to say, okay, am I increasing my chances of losing money by doing what I'm about to do? Or am I making my chances better of making money? So that's all you're doing every time you're trading, anytime you're assessing a trade before you trade as a trader. Are you improving your odds or worsening your already bad odds? That's all you're doing. So as a trader, you should always err on the side of caution. That's all you're just trying to do. So basically, all the teachings I've been giving you and the course and the sessions we've been having so far is you trying to say, okay, if I do this, am I going to worsen my chances of losing money? That's all you're doing as a trader. So let's take today as an example. You could just decide, okay, let me just place my buy order here, my sell order here now. But in view of a report coming out at 5 of high importance, are you improving your chances of losing money? Sorry, are you improving your chance of losing money by doing that or not? And the answer is yes, because there's a report of high importance coming out. You're worsening that your 60% chance of losing money, because you know there's a likelihood that markets can trend sideways. Now, same thing too, I've said you could trade, you can have 3 attempts a day. So technically today you could just go ahead and have 3 attempts, but there's a report of extremely high importance tomorrow, the US Fed interest rate decision. So with the US Fed interest rate decision due out tomorrow, which can increase the chances of the market trending sideways all day today and tomorrow, that would then make you think, this is not a good time to have 3 attempts. I'll just worsen my chances of losing money. You see what I mean?
Yes.
So again, it's the same thing with this. You know, I mean, you've seen quite a few reports of high importance now that come out. You see how the market will be doing that before the report and when the report comes out. So with experience, you know that, this is too close. If I place my order straight away, am I worsening my chances of losing money? So that's the question you're constantly asking yourself as a trader. You know, whatever I'm doing now, you now first take all the factors into consideration: public holiday, reports coming out today or tomorrow, where the market is, sideways trend, blah, blah, blah. You're putting all this into consideration and then asking yourself that question: am I improving my chances or worsening my chances? And don't forget, you're already starting off on a bad foot with a 60% chance of loss. So are you making that odds worse with what you're about to do?
Yeah.
So that's the bottom line as a trader.
Okay, thank you. That
Pleasure.
makes sense. Yeah,
Yeah.
I was just wondering. So I guess the moral of the tale is that, like you already said, take each event as it comes. Although we discuss, you can't cover all eventualities.
Exactly.
So we can do all of these, but at the end of the day, it's what's happening on the day in the market.
Exactly.
Okay.
So it's just like today. You know, I said you can have 3 attempts, but today we're only having 1 attempt because of certain reasons that are presented to us today. So today we might have 1 attempt, tomorrow we might have 3. So every day is different. You just have to take the factors that are presented to you that day and make your decision as to whether you have 1 attempt, no attempt, 3 attempts, when you make that attempt, and then you look at the charts too. The chart too will determine, you know, what you do or not do.
Okay, thank you. Thank you very much for that.
Pleasure. And I think, thank you very much for that, Bola, because that emphasizes why trading is more of an art than a theory thing, because it just shows you that, and that's why I keep repeating to especially people who are new to trading, that it's difficult to become a very good trader straight away, because, you know, it's just, you can't, there's no substitute to practice and experience. You just practice, because like you're right, I'm happy you said it yourself. There's no way any trader can describe every scenario to you. You know, they can't tell you every scenario about this, about that. And again, this is actually why we also have this weekly Tuesday morning sessions, just to emphasize that point that every day is different.
Yeah.
We can teach you the basics, we can give you the rationale, but every day is different. And that is what comes with experience and time and practice. You begin to get used to taking all these factors together, making a decision based on what presents to you now.
Well,
so,
yeah, well, that's definitely reassuring, because I think when you just start, you're constantly kind of second guessing yourself and saying, am I doing this right? Am I doing this wrong? But I guess to a certain degree, there's there's almost no right or wrong answer.
Exactly.
It's how you're reading it, or what it feels like to you, what you're reading it as.
Exactly. Well done. That's exactly it. And that's why I was saying earlier that I should stop saying we. I should say this is what I am going to do, not what we are going to do. Because some traders might decide, which is again perfectly right. That's why there's no right or wrong answer. A trader could say, okay, because like I said earlier, there's no always or never. So and you have potentially 3 attempts a day. So some traders might actually go ahead now and place a pending buy order and a pending sell order over the pivot point and decide to have 1 attempt before the report, just in case. Again, it's their money, it's their risk. They might decide to take that chance, knowing that they could just lose money. You see what I mean? So that's why I always try to correct myself to say, this is what I am doing. Doesn't necessarily mean what you should all do. But whatever you do, make sure you've taken all factors into consideration, and you do whatever you do with your eyes open. So if you trade now before the report at 5, which you can do, you could then decide, okay, let me just risk 10p instead of 50p. You know what I mean? Because I know I'm worsening my chances. I'm taking a higher risk trading before the report. So that's why there's really a lot of flexibility as a trader.
Okay.
But the bottom line is, whatever you're doing, there's a rationale behind it. You're aware of the risk you're taking, and then you do it. So there's no yes or no. But yeah, if you're just doing things recklessly for no reason, you're just guessing. That's where you're just gambling. You don't even know why you don't know why you're doing what you're doing, and that's where you're completely not a trader. If you're just buying, but you don't know why you're buying, you know, if you just decide, I have to be careful, this is my live account, I was about to place a trade, So if you just clicked the buy, if you just went now and do instant execution and click buy and just enter the market now, then can you explain why you entered the market now at this point? At this exact point, if you enter the market at this exact point, can you explain that? And if you can't explain that, then you're just gambling. Why did you buy here? What strategy were you using? Now, if you could explain the strategy you're using here to buy, then that's fine. But if you can't explain it, that you just jumped into the market and bought for no reason, there's no rationale behind it, there's no strategy, there's no thinking, that is where you're wrong. But yeah, if you click buy here and you have a reason, so for example now, which is actually what I was doing, I started trading, which was madness because I was glued to the screen all day, which is what I wanted. So sometimes you could trade using the candlestick. So you can now see here, you know, this is what we call Marubuzo. So in Marubuzo, you can see where the market fell. Can you see that, Bola?
Yes, I can. Thank you.
You can see where the market fell, but you can see the next candlestick.
It's empty.
Yes, but it went up and it fully covered the previous one. So that means that this sell pressure here was fully recovered in the next session here. So that means that the buyers are coming back into the market with full force. They completely overwhelmed the sellers here.
Ah, okay.
Now, this next candlestick is a doji, meaning there's uncertainty. So is it going to go back down or go back up? So you can now say to yourself, if it goes back up, so if it breaks the highest point of this candlestick, I will buy. So you could just be watching and waiting that the minute the candlestick, which you can see here, is about to break it, the minute it breaks it, you will have your order ready just to click buy and jump in.
Wow. Okay. Not sure if I'm ready. Like
No. I'm just saying.
No. I'm just fine. But you know what? You've answered another question of mine. I know when we started, we were not supposed to go back and study the candles, but you've kind of answered the question as to the relevance of the candlesticks and the full candlesticks and the empty ones.
Yeah.
So that's another way of assessing of trading, basically, if you really want to get to the nitty-gritty of it.
Exactly. So you can now see, the candlestick has broken it there. So I will just quickly click buy and enter the market. So now I've explained to you why I bought there. That's the key. Now, if you just click buy, but you can't explain what you did, then you're gambling.
Yeah.
But you can see this is not a good strategy because I will be glued to the screen all day. I haven't got time for that. And I can't teach people that. You just drive people crazy. But yeah, so if somebody learns candlesticks and they decide to do that and they trade doing that, that's fine. At least you can explain what you're doing. There's a rationale, and that's fine. So that's why I was saying that if you speak to 1 million traders, you'll get 1 million different trading strategies. No one is better than the other. The bottom line is, do you know what you're doing? Do you understand money management? Are you aware of the risk you're taking? Once you're aware of your strategy, you understand what you're doing, you know the pros and cons of what you're doing, you can explain what you're doing, and you're applying money management, anything goes.
Yeah, lovely. Thank you. Thank you very much.
Pleasure. Any other questions before we call it a morning? Obviously, as usual, you get the recording posted on the platform, and we'll carry on the platform. Okay, good. So there are no questions. I wish you all a very good day. Enjoy your day, keep safe, and we'll catch up on the platform.